What's up, everybody? Welcome back to another Life Insurance Awareness Month webinar. Again, I'm your host, Chris Muzan, co-founder here at United Agency. And man, we got a good one for you today. Stay here for the next 45 minutes, and I promise you're going to learn a bunch of stuff. There's going to be a bunch that we're going to be able to dive into tonight that's going to really be able to help you, especially if you have a Primerica policy or know somebody that has a Primerica policy. All right. So let's dive right into it tonight. For those of you that don't know, United Agency, we're part of a larger conglomerate of World Financial Group, Transamerica, and Aegon. Here in the financial services space, Transamerica and Aegon have been around for hundreds of years now, being able to service people from the Aegon side internationally, from the Transamerica side here in the States. World Financial Group, United Agency, we're the brokerage side, so we're able to distribute a lot of these financial products that Transamerica and Aegon have, and it's given us the strength and the credibility in the marketplace to be able to do that. For those of you that aren't familiar with how we operate, we're what's called a non-captive agency. So even though we broker through Transamerica as our broker-dealer, we are able to offer hundreds of different companies, some of the top ones you see here on the screen. But normally this helps and is different than what's happening in the industry because we give people the power of choice. Instead of just sitting down with someone where they can sell you a product, we're sitting down with individuals, families, business owners, trying to find out exactly what it is you need and then finding the best company that can do that for you. So that's what gives us a huge footprint in the market. We have tons of products, tons of companies. And so every time we sit down with someone, we're always going to be able to do the right thing for that person. What we really build our business on is being able to help families build a proper financial foundation. That is the key. Tonight and for the month of September, we happen to be talking about life insurance. But these are all the things that we do when somebody is going down their journey of building a financial life, building generational wealth, whatever it is. It starts with a foundation, right? It starts with your ability to be able to say, you know what? I need to build on something strong. And so I need to make sure these things are in place. So these are the things that we look at. If you were to sit down with someone here from United Agency, we would be going over your cash flow, diving into exactly how much is coming in and how much is going out, in case you didn't know and in case you didn't feel it around in our society and our economy. People aren't doing well. About 70% of Americans are living paycheck to paycheck. That means if they missed one or two paychecks, they're in serious debt or potentially bankrupt. 7 out of every 10 people you know are experiencing that right now. So we come in to help that side, make sure people can keep more of the money that they're making, but also be able to make more money, whether it's through their own business or through our business platform, which we give people an opportunity to do. Second thing we look at is the emergency fund. That's short-term savings. Every financial person will tell you you need 3 to 6 months worth of your income set aside, labeled emergency, that you never touch. But how many of us actually have that, right? I'm not going to ask you to raise your hand or drop it in the chat if you don't have that, because that would be the majority of people. But that is the goal. Before we can go off and invest and build all the things that we want to build, we have to first have the habit of saving. Do we understand how to put money aside, how to pay ourselves first? We come in and make sure that you can do that. The third thing we look at is the debt side, debt management, personal loans, credit cards, medical bills, even student loans. We have the ability to sit down and craft a plan to help someone get out of debt. It's very easy for people to get into debt here in our country. It's very hard for most people to get out of debt. So that's what we come in to do, is to make sure we have a plan for those things. So that 1, 2, and 3 side, cash flow, emergency fund, debt management, those are the basics. Those are the basics. A lot of people may not admit that they need help with that, but that's in our experience where most people are sitting, that they need just a little bit of guidance around some of those areas. And then we also do the product side, 4, 5, and 6, proper protection. That's all of the insurances, right? Tonight and for the month of September, we're specifically talking about life insurance, but we also can help with disability insurance and long-term care coverage. not just in the event someone passes away, but also in the event someone gets sick or has a chronic or critical illness. We can help with those things. All of that is a form of protection for someone's financial foundation. The fifth thing is building wealth. That's how do we continue to grow and invest money? That's our what we call our nest egg, your 10-year, 15-year, 20-year plan. Are you in the right places? Are you avoiding some of the taxation? Are you able to outpace inflation with not risking your money too much? These are the things that we start educating on. And then lastly, preserving the wealth. How do we pass it down? Do we have a will? Do we have a trust? Do we know what those products are used for and how they can help our family continue to pass assets down generationally? So this is what we come to do. This is the mission. It's to be able to help families understand how to get this financial plan in place. And best part is we do it complimentary. So if you know people that need any of these things, again, stick around to the end. We'll give you a way to contact us or send us a message or just talk to the person that invited you here because they know how to get on our calendar. Okay. So tonight specifically, again, we're talking about the proper protection side. Those of you that joined us last week, we were talking about the frequently asked questions. We went through about 10 or 12 questions that frequently get asked when it comes to life insurance, when we get the privilege of sitting down with people on the life insurance side. We went over those. Tonight, we're going to dive into something a little bit more sticky. So I'm going to give the trigger warning right up front, ladies and gentlemen. The trigger warning right up front. Make sure this topic that we're going to dive into today may be a little bit triggering. It may be a little bit triggering to you. Why? Well, because we're going to be talking about a specific company and a specific policy that they have. So for Primerica, a lot of times we people that are associated or very close to someone in Primerica may feel a certain type of way about this information. They may feel a certain type of way because typically if you know anyone in Primerica, they're probably close, they're probably near and dear to you. They're probably near and dear to your heart. It's a family friend. It's a cousin of yours. It's a really good coworker. It's someone that you like, you trust, you know. And that's awesome. We are not here to bash those human beings. I'm sure they're great people. We're all on the same mission to be able to help families secure their financial foundation. So this is not a personal attack to anyone that might be listening that has a relative or a family member in Primerica. However, after doing this for 11 years, my wife and I have gotten a chance to sit down with endless amounts of people that have Primerica policies. And just what we've seen over time, we always want to be able to continue to educate on what's right for you. There's no one policy that's good for everyone. And so we just happen to be taking the time tonight to specifically be talking about Primerica policies and why they suck, why they're not good for most people. Again, no shade to anyone that works there. However, sometimes you just don't know what you don't know. And so us being able to dive in and educate you on exactly why and what's happening inside of these policies. If you happen to have one, or if you know someone that has one, again, feel free to share this link with them. Feel free to get them on the live so that at least they can get educated and not take offense, right? Champions, people of the world-class caliber, we do not take offense. Even if it's intended, we do not take offense. So hopefully people are open enough to take this in. By the end of it, I'm going to show you real life examples. I have an example of an actual Primerica policy. So we're not just making these things up. This is the actual stuff that you should know about Primerica. All right. So let's dive in. First and foremost, let's talk a little bit about Primerica's philosophy. I'm not going to dive into this too much, but I just want people to understand if you have never been privy to Primerica, they're very good. They're an insurance company that's very good at prospecting, at promoting, at reaching out to people. Typically, like I said, someone that is close to you, a family friend, someone in your family, a coworker, someone close to you may have been introduced to this company. And because of that, normally we get roped into having a conversation and potentially getting a policy, maybe not because it's the best thing for us, but because we believe and trust the person that it's coming from, which again is important in our industry. But we still have to do our due diligence and we still have to dive in and make sure it's right for us. Primerica's philosophy, so some of you that might not know, is buy term and invest the difference. Some of you may have heard that, right? If you've heard that term, buy term and invest the difference. Primerica picks that up. There's other companies or other people that might follow that philosophy. But what does that mean? That means in the insurance, in the life insurance space, they believe you should buy a term policy, which we're going to dive into, a temporary policy, and take whatever difference of money that you would have maybe spent for a permanent policy, take that difference and invest it somewhere else in the market. So it's okay to buy term, buy temporary insurance for a small amount of price, typically, right? That's what term is for. It gives you coverage for a window of time. And normally you're paying a little bit for that coverage, so it fits into everybody's budget. And then take the difference of maybe what you would have put inside of a whole life or an index universal life policy, and you take that and you go invest it in better places like the stock market, typically a mutual fund, an IRA, or something of that nature. Okay, so that is their philosophy. Now, one of the problems is that's a one size fits all philosophy. One size fits all. That is a matter of like no matter who they sit in front of, regardless of their age, regardless of their financial status, regardless of anything, that is the philosophy that they stick behind. So because of that, that's already problematic. If someone has a philosophy about something and they choose not to bend or go a different direction, they're putting everyone in one category, and that's a problem. Imagine you went to the doctor. Imagine you went to the doctor because you had a stomach ache. You go to the doctor says, hey, I got it. You got a stomach ache. Here, take this Tylenol. You'll be good. You go, maybe it helps your stomach ache, maybe it doesn't. You come back to the doctor and you have a broken finger. You have a broken finger, and the doctor's like, got it. Broken finger, here's some Tylenol. Come back, maybe that works or not. I don't know. Come back, maybe you have an upset stomach, right? Maybe you got a headache. Maybe you got in a car accident, and every time you come back, they tell you, here, take Tylenol, take this Tylenol. Broken arm, take this Tylenol. Bum ankle, take this Tylenol. Bad stomach, take this Tylenol. Imagine if the doctor did that. Eventually, someone wouldn't be getting helped. Eventually, someone, that philosophy, that medication wouldn't work for everyone. Yet, company like Primerica, that's what they believe. So again, not going to talk too much about that, but it's good to understand if you do have this product, if you do have a policy, that they believing that there's one way and only one way to go could be problematic for some people, okay? Here's some stats to know. On average, Primerica policy premiums are 30% higher than other term insurance policies in the industry. Premiums meaning that's how much you're paying for your coverage. So typically about 30% more you're paying than other insurance companies that are out there. Now, you might not know if you haven't sat down with other companies, one of the benefits of what we do is because we have the spectrum of companies. We have all the different companies on our platform, so we can identify the pricing of all of these companies. That's the difference between being a captive company and a non-captive company. Pulled this from Forbes. They created a list of the top term companies in 2023 or 2024. Some of these companies you may recognize, some of them not, but we offer the majority of them, whether it be Banner or Symetra or Pacific Life. Corebridge Financial used to be AIG, Penn Mutual, Transamerica, Protective, Midland National, Nationwide. These are all, as Forbes has listed them, as the top term companies in the industry. Now, obviously, you see Primerica is not on that list. Again, not here to bash it, but just taking the information in to say, well, maybe if you had options with other insurance companies, you might pay a little bit less. You might pay a little bit less for your premiums and still get great coverage, still make sure that that company is going to be around. These are all A minus and above rated companies, and you can still have proper coverage through them. Okay. So again, this is just information, just a little bit of education. Some things about Primerica policies. They have no frills. Right? You ever buy a car, right, with no frills? It's got nothing extra to it, no bells and whistles. It's just like the standard thing. Well, those are most Primerica policies. You're paying more for less features, so 30% higher than most in the industry, and you don't really get the same features. You don't really have any of the same features, right? They don't offer something called living benefits. Living benefit, we're going to look at and talk about, but Transamerica has a product called term with living benefit. But Primerica policies don't offer that. Okay. What is a living benefit? Here's a basic breakdown. So a living benefit is a term policy, same 10-year, 15-year, 20-year, 30-year policy. But instead of it just having a death benefit, meaning when you pass away, this goes to your beneficiary, it has a living benefit, which says if you get a chronic or critical illness, this will start to pay you out while you're alive. So it says here, a critical illness could be a heart attack, a stroke, cancer, ALS, major organ transplants, paralysis of 2 or more limbs, all of these types of things, which I'm sure we all have encountered people that actually have had these happen to them. They've had, people in your family that have had a heart attack or had a stroke. People that have had paralysis or they had to have an organ transplant. Imagine they had a life insurance policy that instead of them having to now file for disability with the government, this policy would have paid them up to 90% of their policy value. That means if they had $1 million term policy and then they got cancer or then they had a major organ transplant, this would pay up to $900,000 for them to take care of themselves. How awesome would that be, right? Not to mention the chronic illness side. If you're unable to perform 2 of the 6 activities of daily living, if you need help bathing or dressing or eating or going to the bathroom or any of those things, well, this policy would pay out up to 24% of that face amount every year. So again, if you had this $1 million term policy and then God forbid in year 17, in year 23, in year 6, something happens to you and you have a chronic illness where you need help doing some daily activities of daily living, $240,000 a year would get paid out for you and your family to take care of you. Again, these are benefits that come with the policy. This is specifically with Transamerica. Primerica does not have this attached to their policy. Terminal illness is if you have less than 12 months to live. We'll look at this, I think, with the Primerica policy. They have a terminal illness also, but it's only if you have 6 months left to live. So a little bit different. So again, all insurance policies are not created equally. All insurance policies are not created equally. This is living benefits. This is a product that Transamerica offers, and you'll see towards the end how it compares just apples to apples, right? Imagine I put you into this 2010 Kia, right? You paying $200 a month for this 2010 Kia. Some of y'all are asking for a car anyway, right? You'd probably be happy with that, right? But that's awesome. But you know what would be more awesome is if I could get you a 2024 BMW for the same $200. Which one would you choose? Which one would you choose? If I said, hey, you can get this 2010 Kia, it's got 110,000 miles on it. It's a $200 a month payment. Or I could get you this brand new 2024 BMW. It's still a $200 a month payment, but you get a little bit more. Which one would you choose? Most people, of course, would choose the newer car. Yet we don't make this decision with our life insurance. If Primerica has a policy that's a little bit older, a little bit more outdated, paying a little bit more for it, but you could get something with living benefits, something a bit newer, and still pay the same amount, if not less, Wouldn't you make that switch? Wouldn't that make sense? Of course it would. I'm speaking to your sensibilities here. I'm speaking to your sensibility. Of course, that would make sense. And most people would do that if it were a car. But we might not think about doing that with our life insurance. It's kind of like one of those things. Once we set it, you set it and forget it. It's like, oh, I got it. Well, what if we could upgrade you? What if we could put you into that brand new car? Sound like a car salesman, right? What if I could put you into that brand new car for the same payment? Well, now we have to think about it, all right? Another thing about Primerica policies, they don't give favorable ratings. What's a favorable rating? So when you go down this process of life insurance, we talked about this last week. Life insurance deals with your age and your health. The older you get, the more unhealthy you get, the more you pay. The younger you are, the more healthy you are, the less you pay. When it comes to health, every company has a rating for how they rate you. This will determine how much your cost of insurance is. This will determine how much you're paying for this insurance coverage. Most companies have a scale. Standard is the average. It's just like, all right, you're not good, you're not bad, you're just standard. Well, most Primerica people that have Primerica policies, take a look at it if you happen to have one and find out where you got rated. Most people get rated at standard. Not sure why they rate it that way or why they do that, but most people that have a Primerica policy get rated at standard, not knowing that even Primerica, but other companies have superior ratings. So take a Transamerica. They have not just standard, they have standard plus, they have preferred, they have preferred plus, which means the better health, the more healthy you are, the better you are in your rating, the less you pay in cost of insurance. But if we're only getting rated at standard, then we don't even have the opportunity to try to pay less for that coverage. So a lot of Primerica policies and a lot of agents that run them specifically just at standard. Again, not sure why. Maybe that's something, if you have a Primerica policy, maybe you should take that up with your agent and find out. But we know when we do policies on our side, we're always going to ask how your health is. If you are in a great health, you're good age, we're going to rate you higher. We're going to say, hey, this person's preferred. This person's preferred plus. This person's preferred elite. Their blood work is going to come back great, or even a lot of these companies don't even have to do blood work. And you can still get that preferred rating, which means your cost of insurance is lower and you will pay less than if you were just on a standard rating. Here's something else to know. Going through these quick. Children and spouses are normally riders. So what's a rider? A rider is like an addition to the policy. If you take a life insurance policy, ladies and gentlemen, and you are the insured, typically there's two parts. There's the owner and there's the insured. The owner is the person that can make all the changes, right? Make all of the decisions about who pays the policy and when it cancels and all the stuff. We talked about this last week again, where someone asked, oh, well, can I get insurance for my father? Can I get insurance for my child? Can I get insurance for my spouse? And I always say, sure, you can be the owner, but they have to be the insured. If they're over 18, they have to know that they have this policy. They have to sign off on it. So in a standard policy, you have the owner, you have the insured. The insured is the person that if they were to pass away, then the death benefit pays out. The owner just controls the policy. Now, normally it's the same person, but every once in a while it could be different, okay? So here's something to note. Here's something to note, that a rider is just an addition to the policy. A rider is just an addition to the policy. It's not the actual, it's not the actual insured, it's just a part of it. So for Primerica, they are adding riders. So if your child is a rider on the policy, it means you, the parent, are the main coverage, and then your child is an attachment, an addition to that policy. They don't have their own policy. They don't have their own separate policy. It's an attachment to your policy. Primerica also likes to do spouse riders, meaning there's one spouse, the breadwinner, normally head of household, they're the insured, and then they attach the spouse to that same policy. So both people do not have separate policies. They're one policy. Imagine it's like you and your family sitting on one horse. All of you and your family are sitting on one horse. You don't have different horses to ride. You're all sitting on one horse. And in order for that horse to move, in order for that horse to go, all the family, everyone, spouse, child, whoever's on the policy, has to be on that horse, right? If one person falls off that horse, aka if one person passes away, the horse doesn't move anymore. Okay. So that's a downside to say, okay, everybody in my family is on this one policy. Let's say my spouse is the person that passes away. I'm the insured, my spouse is attached, my spouse is the one that passes away. Well, what happens if that spouse or child passes away? The death benefit gets paid out. So, however much that spouse was covered for gets paid out, but the remaining people on the policy lose their coverage. No more life insurance. They have to have a new policy written for them because that horse could only move when everyone was on the horse. As soon as one person falls off the horse doesn't work, right? The horse doesn't move anymore. The policy doesn't work anymore. Now everyone has to go back and get life insurance again. And the new policy, even though this is with Primerica and other companies, but with Primerica, they will allow you to just get the coverage, right? And not go back through full underwriting because you are already a client, but you will write a policy at your current age. So let's say you've had that policy for 19 years and then that happens. Well, they're going to now, if you need a new policy, you're 19 years older, they will still approve you, but now you're going to get rated wherever you are 19 years later. So that's the downside of having a rider. It happens. It's a possible way to save a little bit of money because putting your child on there might only add another $5 a month or something like that. But at the end of the day, if we're thinking about this for longevity, for long-term wealth building, or being able to pass things down properly, we have to understand how a rider works. And a rider has to have everyone there. If someone falls off, the whole policy, null and void. They got to start anew. All right. Want to show you some examples. Again, we've been doing this for over 11 years. So obviously we've been able to look at other examples and look at other policies. And Primerica is one of those policies we come across a ton. And so I just want to give you a little insight. I'm going to highlight a couple things here for you so that you can take a look at it. This is, again, a live policy. I've blacked out a lot of the information, right, on this policy, so you really shouldn't see it for the client. But let's just start at the top on this first page. One of the big misconceptions for people that are not educated when they get their policy, because we've had this happen, we'll ask them, hey, do you have a term policy or a permanent policy, right? We'll ask that question. And they'll say, oh, I think it could be a permanent policy. They might believe it's permanent. And then they'll tell us it's with Primerica. And then we'll tell them, well, Primerica doesn't offer permanent policies. They only offer term policies. And people would fight us back and forth from this one part where it says term life insurance to age 95. Now, that might be the case, but you'll see in here that doesn't mean that you keep the policy until age 95. That just means that's when the policy completely cancels. Like they won't cover you past the age of 95. That's what that's saying. Okay. So let's work our way through the policy. I've taken out some of the things, but here's normally what you're going to see when you look at a policy, the specifications. So we're looking at a 27-year-old female. This policy was written in 2020. So this is a live policy, was written about 4 years ago. And this person got rated at standard, right? This person got rated at standard, okay? So $100,000 was the face amount. But let's look at some of the details of how this agent chose to write this policy. So there's term life insurance of $100,000, but then there's some riders. What are riders? Some attachments, right? Some additions that they add to the policy. So they put an increasing benefit rider, right? An increasing benefit rider. They also put a children's term rider, meaning the child will have $15,000 of coverage inside of that policy. Okay. Again, attached. Remember the horse example. And then there's a waiver of premium rider on here, which basically just says in the event someone is totally disabled for more than 6 months, they don't have to pay their premiums right away. The company kind of takes care of it for them. All right. So that's something to know when you look at the policy specifications. But let's look at the illustration. The illustration shows exactly how this person's going to be paying their monthly premiums inside of the policy. And these are all things, if you have a Primerica policy, you should be able to see this. You can go to these same pages in there, you can take a look at it, and it'll explain similar things to you, depending on your coverage amount and those things, okay? But look here, it started in year 2020 with 100,000 in coverage for $39.63. That's with all the riders attached to it and everything, $39.63. Now, just a little education, where you see maximum modal premium versus scheduled modal premium. Scheduled is what you look at because that's what typically the company is going off of. That's how much you're being charged. But maximum is saying if anything changed, by law, we can charge you up to this amount. That's what it says. Scheduled is what we're expecting you to pay inside of here. But let's say we go to war. Let's say we have to pay out a bunch of people. Let's say the company, something happens. By law, we can charge you up to this maximum amount. That's the difference between those, okay? So look at this. Every year, because of that increasing death benefit, right? That increasing benefit rider, this girl's premium goes up 20,000, excuse me, her death benefit, her coverage goes up $10,000 every year. Goes up, right? So she starts at 100,000, then next year she's got 110,000, then 120, 130, all the way up. It stops at 200,000. But also, her premium is going up every year as well. So not only does she start at $39, but then it goes up to 41 and 42 and 44 and 46. So by the time she's at this stage, 2024, right? She's at $46 a month and she only has $140,000 of coverage. See that? Keeps going up. She's at 150,000, 160. Now she's at $49, $51. Boom, she gets to year 11 because only went 10 years to get 200,000 in coverage, and then it stops. It doesn't add any more. So she's now at $59.11 for her term coverage for $200,000 worth of coverage. It's going to stay at that price. It stays locked in. Then what you see down here is at 25, at the 25th year, right? Right there, she's still at 200,000. But now maximum, they could charge her up to $84.94, but it's scheduled to be at $69. That's at year 25 for her inside this policy. Now she's at $69, but still 200,000 in coverage. Wait another 5 years. At the 30th year, still same 200,000 in coverage. Now it could be maximum 124, but scheduled $95. So this person now is only 56 years old. Well, imagine you're 56. Now you got more kids or you got grandkids. And now every year your policy continues to increase. At age 61, it's at $123. Then at age 66, it's at $320. It just continues to go up. Now that's how all term policies work. After the certain level amount of time, in this one, I believe it was 30 years, Actually, it's 25 years on this one, or 20 years, it looks like. After the 20 years of level premiums where all of it's the same, then it starts to increase again just by default. But this time, no more extra coverage added, just more premium being paid. Okay, so I want you to see those numbers. At 5 years in, 140,000, it's already at $46 a month. Now the policy goes down to break down how this separates it. So this is the basic 100,000. You're just paying $28 a month for that. But then again, year 35, it jumps up. But that's all incorporated with what you saw up there, right? Then this breaks down the different riders. So the terminal illness rider, they break down what are the benefits in there. Again, these are the things you should be able to see inside your policy. The increasing benefit rider, right? What does that say? How does that work? It breaks it all down for you. It also shows kind of how much it costs specifically just for that rider. So just for the increasing benefit rider, it showed you, all right, this is how much you were being charged. And even after it goes up, it's still being charged that every single month. You're still getting charged $18.35 for that extra 100,000 in coverage until she jumps out of that at year 20, and then boom, it's up to 37.15. Maximum could be 52. So the riders continue to grow and add more premium to the policy, even though it's not increasing the face amount. Again, don't know if that's the best thing for most people, but it's happening inside of these Primerica policies. Children's term rider, again, shows you the difference between, or it says, again, for that 15,000 in coverage, that's how much it said. For 15,000 in coverage, this is how much that it's going to be, right? The first year, 15,000 in coverage, it's $97 a year for it, and this doesn't go up. But after age 25, and this is how all children's riders work, after age 25, that child has no more coverage. They fall off the policy. Now they have to go and get their own life insurance. So again, as a rider, not always necessarily the best addition to your life insurance policy, right? Also has that insured disability waiver that says in the event, right, you must have total disability for a continuous 6 months, and then it'll start to pay out. I believe it was 40%. 40% of your death benefit gets paid out because you are disabled. So that's how you read a Primerica policy. That's how you read many insurance policies. But the thing to note, right? The thing to note are the specifications. At age 27 for $100,000 at standard with Primerica with these riders added, this is how much this person would pay. And that's something that you got to dive into if you have a Primerica policy or if you know people that have them. All right. Now let's cross-reference that really quickly. Let's cross-reference that with a Transamerica policy. We did, and this is going to be interesting. I want you all to remember these numbers. 5 years in, in 2024, right? If this was written in 2020, 5 years in, she would be at 140,000 in coverage for $46.09, 140,000, right? By the year 2030, where she gets to 200,000 coverage, she's at $59.11. Okay, remember those numbers as we cross-reference this with a Transamerica living benefit 30-year term policy. So I explained to you what living benefit is. Living benefit says if you get cancer, stroke, or a heart attack, you have a chronic or critical illness, this will start to pay you out while you're alive. What I did here is I said, hey, let's start now. 5 years later, instead of her being 27, she's 31. 4 years later, 5 years later, let's make it realistic. What if we were just saying, you know what, apples to apples, let's take the policy that they wrote for you 4, 5 years ago, and let's update it and say, okay, if we wrote this policy right now for you, what would this look like? I kept the person at standard, just like the Primerica policy, but look at this. $250,000 of coverage, $250,000 of coverage, only $44.51. We just took a look at it that at the same time in the Primerica policy, it would be about $44, but only $140,000 in coverage and no living benefit. And it continues to go up every year. We rewrite that policy and say, you know what? Give you an extra $110,000, give you an extra $50,000 as it gets down the line. You're paying less than what you've been paying, and you get extra benefits of the chronic and critical illness side of things. If you look here, again, you see level payments. This is the annual. So this is what $44 times 12 would be. It would be $534 a year for straight 30 years. And then after that 31 years, it goes up just like every term policy. That's the way it works. But there's more benefits to that side. There's more benefits. Take a look. We also gave the child $25,000 in coverage. Is this where it is? Oh, wait, it's down here. Children's benefit rider. We gave the child $25,000. On the other one, it was only $15,000. So not only did we get the primary insured more coverage, but we also got the child an additional $10,000, and they're only paying $44.51 a month. This is 4 years after that other policy was written. So go back to what I said about being in a 2010 Kia for $200 a month, or getting into a 2024 BMW for $200 a month. That's what we're showing you. You could have an older policy with no frills because you like the person that sold it to you. Or you could say, you know what? My family needs more coverage and I'm going to pay the same amount, and I need some living benefits attached to that. So just in case I have a chronic or critical illness, my family's taken care of. Those are the differences, ladies and gentlemen. Not to knock the company, but to understand that there could be better policies for you and your family if you just take a look at your options. That's what we do on our side. We help you look at your options. We help you take a look at what's best for you and your family, not just because you know the person that sold it to you, but because this is going to be the best thing for you moving forward to make sure you have a solid financial foundation. So I don't want to hone in too much on it, but I hope you see those examples. If you have any questions, feel free to drop them in the chat here in the Zoom, or drop them on the chat in Facebook. We're more than happy to answer any of these questions, because this is the education part. This is the education part. We want to make sure you have the proper protection for you and your family moving forward. We want you to know that we just want to grow together with all of you. Our motto is helping families, building people in a better life. We want to make sure that you all know that we're here to spread the message of financial education, of financial literacy, of making sure people get the information they need in order to, again, protect their families and build a solid financial foundation. We want to build you up to becoming the best version of yourself. If you choose to come into business with us, or you have the ability to build your own business, we want to support you in what you're doing by helping you actually get to the place where you know that you have people in your corner kind of heading in the same direction as you. So this is our vision over the next few years, to help 1,000 families become financially independent through the gift of entrepreneurship, to lead 1 million people on a journey of self-mastery and personal growth, to help 1,000 families here in WFG get to that $100,000 of income, which is a marker in our society. We want to be able to sow 10 million into small businesses to promote entrepreneurship around the world, and to create a vision school for people and youth specifically that need a little bit more help dreaming a bit bigger. That's what we're here to do. Scan that QR code. Let us know where we can help you. That takes you right to a feedback form. You can leave us your comments, leave us some feedback on what you got from today. And if you do need further help, we'll be able to read those feedback forms and set up further time with you, maybe to dive into your Primerica policy, or maybe you can introduce us to the family member that is in Primerica that maybe just needs a little bit more education around their policies. Or just connect with the person that invited you. If someone shared this with you or sent this to you, connect with that person and they know how to get back in touch with us. Feel free to download our free ebook on insurance. Right there is the link, bit.ly/insurance protection 101 ebook. We have all of these resources free for you. If you download that ebook, it'll basically go through all of the things that we talk about in the insurance space. If you don't want to hop on these calls, you rather be a self-learner and just read something, well, that's going to give you a nice overview of all these things in the insurance space. And then if you have further questions, we're more than happy to set some time with you and give you a little bit of education. But download that free ebook on life insurance and make sure that you're educated on what's out there. Lastly, feel free to join us for the rest of this month. Again, September's Life Insurance Awareness Month. That's why we're diving into this. That's why we're going into these things. So every single Wednesday for the month of September, 8 p.m. Eastern, we are diving into a different topic. Last week, it was the Q&A, the frequently asked questions. Today, obviously, we dove into these Primerica policies. Next week, we're diving into why Gerber may not be the right thing for your kids and what are the other options. Have you ever looked into an IUL policy versus a Gerber policy? Do you understand the difference between a 529 plan and getting them into an IUL that can help them do some of the same things? So we're going to talk about all those things next week. Feel free to share it with anyone. If you haven't registered in the Zoom, if you're watching on Facebook, feel free to register to get into the Zoom here, be able to interact, drop your questions, all of those things. But next week, Wednesday, we're talking about why Gerber policies may not be the best for you. All right. Guys, we appreciate all of your time and attention. We know how busy people can be. We're glad that you want to take some time and take in this information so that you and your families can continue to grow and continue to get better. And here at United Agency, we're here to help you along that journey. All right. So until next Wednesday, you guys, enjoy the rest of your night. Take care.
You cannot be what you cannot see. If you guys aren't having a vision strong enough to see forward together, then you will never really become what it is you're hoping to be.
There we go, get the end in. There we go.
Our motto is faith, family, business. In that order.
We're super grateful for all of you for sacrificing, for taking time out of your week, for having a financial commitment to this. So we want to recognize just the top couple cash flows. Number 2, Lily's. Give Lily a round of applause. Number 1, cash flow. Todd and Lisa have a rising star couple. Another superstar couple, Graham, Veronica.
I'm so proud of our company. I'm excited about all the new things we've announced. Each and every one of you represent your own family. And we're all together here, we're really showing out.
When this company was started on the foundation of faith, believing that you are going to come and make a difference in your community.
I want you guys to all know that there's room for you here. If you're old, if you're young, I want you to know that there's room for you here. If you're scared, there's room for you here. It's okay. If you want to build a team, if you don't want to build a team, there's a whole bunch of space for you here. If you're an introvert, if you're an extrovert, I want you to know that there's a bunch of room for you here. You belong here.
We have our own WFG chef in the kitchen.
He's here. United, when you see it all caps, it actually stands for Ultimate Network Improving Teams and Entrepreneurial Development. That's really good. That's why we're united.
United